A high-level U.S. trade team is in India this week to push for a long-pending trade deal. The talks come after months of tension and a 50% tariff hit has hurt Indian export and investment. Both sides say the window for a breakthrough is open and India believes it is only a matter of time. And here's what at stake. While Commerce Minister Piyush Goyal on Wednesday expressed optimism about the ongoing trade negotiations with the United States, stating that discussions are progressing well towards a bilateral trade agreement.
United States of America की team.
U.S. trade team is in India from Tuesday. The trade talk is progressing and we're going forward towards a bilateral trade agreement.
The new U.S. negotiators, led by Deputy USTR Rick Switzer and Chief Negotiator Brendan Lynch, began 2 days of meeting in New Delhi. Now, the goal is to settle a trade deal that has been on hold since the imposition of additional U.S. tariffs. Meanwhile, India's trade surplus with the U.S. has shrunk sharply. It fell from $3.17 billion in April to just $1.45 billion in October as India increased imports from America. Exports to the U.S. have been hit hard, especially after tariffs reached 50% in August. Exports to the U.S. dropped from $6.86 in August to $6.30 billion in October. Now, the biggest decline were in garments, footwear and sports goods. Meanwhile, imports from the U.S. surged. They rose from $3.6 billion to $4.84 billion over the same period. Now, the shift has helped reduce the trade gap, but it shows how the tariffs are reshaping flows. Energy is now a central part of the strategy. India has stepped up crude purchases from the U.S. as sanctions on Russian supplies take effect. The U.S. share of India's oil imports has jumped from 4.43% last year to 7.48% this year. LPG imports are also rising after a new one-year deal with around 2.2 million tons a year coming from America. Nuclear cooperation is also on the table as India signals new openness to private participation. The tariffs have also triggered capital concerns. Weakness in the rupee and high volatility has affected FDI portfolio flows and debt. The RBI sold $65 billion in the market and is running a large forward book position. The rupee has weakened around 7% in a year and the real exchange rate has fallen even more. Uncertainty over the deal is adding pressure on inflows. Meanwhile, New Delhi has responded with quick policy changes. Quality control orders have been relaxed, an 11% duty on cotton was removed, and long-pending labour codes were notified. A panel is now working on fresh deregulation to support manufacturing and exports. India is also pushing other trade deals with the European Union, New Zealand, Israel, Chile, Peru, and the Eurasian Union. The mood in Delhi is that a deal with Washington is close, and with investment, energy and strategic ties on the line, both sides are under pressure to find common ground.